Hey everyone, this is Kirk here again from Option Alpha, and in this video I want to walk through how to build an automated scanner in the new auto trading platform. So when you're inside of your first spot here, you're going to jump over to the automations tab, and as we've described in other videos, there's essentially three different automations that you can run to basically control anything you want inside of a bot. There are scan automations, which are going to scan for new opportunities to open positions, again, within the confines of the bot settings for number of contracts and the risk and max allocation. Then you also have monitor automations, which repeatedly monitor positions for management. So consider this to be your portfolio manager, where if a new position is opened or a new type of position is opened, you can go through a system of decisions to exit the position at predetermined profit targets and or before expiration. And then you have event-based automations, which are triggered on a series of events on a recurring schedule and or in a particular date in the future. So in this video, we're going to walk through how to build just a simple scanner automation. And so you just really want to click this button here to build your first scanner. You'll see that you have the ability to select from an existing automation, but in this case, we don't have any existing automations in here. What's really cool about this is we gave you the ability to save automations to a list called My Automations, which means that you can reuse the same functionality over and over again in other bots that you're building. So if you're building this particular bot and then you clone it and you want to build a bot in another area or with another ticker symbol or another type of strategy, but still want to use the same scanner functionality to enter the position, you can do that by just simply saving the new automation that you create to the list called My Automations, which we'll do here in a second. In this case, we don't have one, so we'll just create a brand new one. This opens up a brand new screen here where we can name this automation. So in this case, we'll say My First Automation, and we'll say My First Automated Scanner. And then again, you can see here, you can just simply check the box to add this to your list of automations. Again, that way you can save it in the future. So once you save this, then you can start filling out the decision tree here. So this is our decision tree platform. This basically makes all the decisions for you, and you can group decisions and basically build out this tree as complex as you want. And every time the scanner functionality runs, it will go through the series of decisions until it reaches an endpoint. In this case, we start the automation with a simple decision. And in this case, we'll just go ahead and add a criteria to see if the symbol price is above some particular moving average. So in this case, we might be trading here SPY. And so we're going to see, is SPY's price above its 50-day moving average? And again, this can be a simple decision tree that you want to build. You can build in a lot of complex decisions here. You can add and group decisions together. Maybe you want SPY's price to be above the 50-day moving average, and you want the VIX's price to be below its 30-day moving average, for example. So you say the VIX price needs to be below its 30-day moving average. Potentially that the stock is in an uptrend and the volatility is generally low. Again, you can group any of these decisions together in as many combinations as you conceivably want. You can create and or statements. So this decision would fire if either of these statements is true. If you put it together as an and statement, that means that the decision would be yes if both of these decisions are true at the same time. All right, so once that decision's been saved, again, you'll notice now that you have two different ways in which you can now continue with the automation. And so what will happen is that every time the automation runs, it will go through this decision kind of roadblock, and it will have to answer the question either yes or no. Either yes, the S&P is above the 50-day moving average and the VIX price is below its 30-day moving average, or no, one of those two is wrong and the S&P is below the 50-day moving average or the VIX price is above its 30-day moving average. These are really easy to change because you can just simply go in here to settings and edit these, and then again remove one of the groupings or one of the decision criteria. So in this case, if we want to just remove the VIX criteria from this, we can just simply delete it and then hit save. And now we have a more simplified and streamlined automation. So next part here is going to be filling out the rest of the decision tree for this automated scanner. So in this case, we probably want to make some sort of decision if the S&P is above its 50-day moving average. And so we just simply add that plus box, and then we potentially make a new opening position. Let's say, for example, that if the S&P is above its 50-day moving average, we want to sell opposing put spreads against the market and try to take advantage of a little bit of a trend trade. So we just simply enter into our symbol here, the expiration date that we're trying closest to. So in this case, maybe the 40-day contracts we're trying to get to. If we only want to deal with the monthlies, then we would click this box and only deal with the monthly contracts. If we wanted to make this a little bit more unique, we could, again, choose a particular strike price if you wanted to, or you could just simply set it at a 30 delta or a 25 delta, whatever you want for the short strike. The long strike could be set at some other delta. In this case, we'll move it down to a 5 delta to make it a pretty decently wide contract. And then you can also set the amount of contracts that you want to trade. If you only wanted to trade one contract or two, you could set that here, or you could also set the risk amount at, say, some particular amount. So you could only trade, say, $500, or you would only trade up to $900 of risk. And so what will happen is that it will trade as many contracts as you can, or as many spreads as you can, until it reaches that risk threshold. But if you do set this too low, that also means that it potentially will not fill the trade, even though it will go through the automation process. In this case, since we're setting this as a pretty wide spread here, a 30 delta and a 5 delta on the long side, if we set the amount to just risk $100, it's probably unlikely that we would ever get filled on this position because we don't risk enough money to actually cover that spread on SPY. Maybe some other tickers might actually cover that spread if you do just like a $1 wide spread. But in this case, we'll just keep it at one contract and just allow it one easy contract to enter just to make it very simple. So once we hit save, you can see that the new auto trade strategy flows into the decision tree. So again, what will happen is once the automation starts, it will run a decision to see if the S&P is above its 50-day moving average. And if it is, it will open a new short put spread, again, with the parameters that we had set. Again, it's really easy to go into the settings and to go back and double check and make sure that you wanted these parameters in here. If you wanted to adjust this, and let's say you wanted to sell, instead of the 30 delta, you wanted to sell the 40 delta strike, you could again go ahead and do that and then just hit save, and it's all saved. Another thing that you can do is you can actually make a decision if the answer to this question is no. So this is a really simple trend type strategy that you can run where you can sell put spreads in the opposing trend of where the market is. So in this case, if the S&P's price on a particular day is not above the 50-day moving average, but is below the 50-day moving average, which would cause this to enter no, then you could go in here and you could open a position to sell a call spread. So you could sell a call spread, again, on the S&P, and you could do it at 45 days or 50 days, wherever you want, change your deltas, number of contracts, etc., and hit save. And so what's really cool about this is now you have a dynamic strategy that's going to be making decisions every single time that it has an open slot in the bot settings to enter a new position. It will run through this decision tree to say, okay, is the S&P's price above or below the 50-day moving average? And depending on the answer to that, you can either open a short put spread or open a short call spread. So it's really easy to, again, set these up. And then all you have to do is just click out of this. And now your first automation is in here. Again, if you wanted to run it on a particular symbol versus hard coding it in, you could just simply type in the symbol here and it would always run on that symbol. And if we link it up there, we could. In this case, we're always going to run this on SPY because that's what we coded in. So we just hit save, and now that first automation is in here and it's waiting for an opportunity to enter this position. So again, it's really easy to just build out these very simple scanners. We'll continue to do these in more videos so you guys have multiple ways in which you can go ahead and build out scanners for your bots. And if you have any questions, let us know. Until next time, happy trading.